From the Bank of Canada outlining their concerns, and a big one is obviously trade, what it could mean for the Canadian economy, and perhaps no more pointed today in the fact that Gary Cohn leaving the White House, seen as someone who would push back against Donald Trump on protectionism. He's gone. For some reaction to all this, we're joined now by Adam Button, the chief currency analyst at Forex Live. Good to see you again, Adam.
Good to be here.
All right, so first out of the gate, let's talk about what this means for the Canadian dollar. Not only holding on rates, which was widely expected and priced in, but the fact that we have a very cautious Bank of Canada here.
Yeah, I mean, we're looking ahead to this year, right? Now, April seems awfully unlikely they're going to hike rates now. And if you look farther out into the year, the market was pricing about a 50% chance that we would hike rates 3 times. That would mean you'd have to hike in June, September, December. Now, what would need to happen to hike rates 3 times in that time? You'd have to clear up the NAFTA uncertainty. You'd have to have some much better economic data. You have to erase the housing worries. And I just don't see any way those 3 things can happen. So those rate hikes are priced into the Canadian dollar, and they're going to have to come out, and the Canadian dollar is just going to have to come down.
Now, right now, we're at 77 and change on the Canadian dollar. How far could it come down?
Yeah, I think we could look at 75 cents really in the next month or so. It's been in a tough spot over the last week or 2 weeks on trade worries, and that's probably skewed the market a little bit out of line. But there's just so much uncertainty, and as we saw today with Gary Cohn leaving, there's more uncertainty than ever. And you know, with Trump tweeting about trade, that's at the top of the agenda right now, and Canada is the United States' biggest trade partner. So the threats are real and they're growing.
Now, if NAFTA actually did fall apart and we weren't sure where the pieces were going to land, I mean, even we have trade experts who come on who know these deals inside and out, saying, I don't know, do we go roll back to the free trade agreement between the two of us? Do we hammer out a new deal? That would be a huge amount of uncertainty. How many cents could be lopped off the Canadian dollar in short order?
Yeah, I think some of it's priced in. I think if we get that headline, America says they're leaving NAFTA, that's 5 cents right off the bat, I think, is you know, over a week or so. I think you would see a little bit of panic in the markets. And at the same time, trade itself in this tariff story, I think the next headline, if we look into the near term though, because that might take months, the next story will be, do these tariffs apply to Canada now? Will we get an interim waiver? So they say, okay, if we get a new NAFTA deal, we're not going to apply it to Canada and Mexico. Okay, well, we're working on this deal, so let's negotiate in good faith, and we'll waive the tariff for now. And I think you could get a Canadian dollar bounce in the near term if that's the case. But if they say, you know what, tariffs apply, and we could find out as soon as this weekend whether they do, then I think you'll see a little bit of fright into Canada, because Canada has said it's going to retaliate, and you know, then it's the tit for tat, right?
The old calculation has always been that a weaker Canadian currency is good for our exporters, like particularly the Americans, our largest trading partner, looks and said, oh, look, the Canadian goods are cheaper than they've ever been. Let's buy. It is a weird wrinkle to throw into that old equation, the fact that we're having all these trade problems with the United States.
Yeah, and again, if they put a 10% tax on aluminum, the Canadian dollar falls 10 cents. You know, then it's sort of net for some of the sellers. I mean, there's a lot more that goes into it than that. And I think the problem right now that the market isn't really seeing is the reaction function from the White House. So today we had U.S. trade deficit. The deficit, excluding petroleum, is at the highest ever in the United States. America would have a gigantic trade deficit if they hadn't revolutionized shale oil. So that has propped it up higher than it would be. But the trade deficit there is growing. And why is that? Well, you had a massive stimulus to an economy that's already operating at full capacity. So, you know, you want a BNN mug. You call up the factory and say, I want 1,000 of those. Well, the factory says, listen, we're already running 24 hours a day. It's going to take 2 months, and we're going to charge you full price. So you call the Mexican factory. They say, sure, we can get it to you in 2 weeks. So now you have this stimulus that you're using to buy mugs or airplanes or industrial equipment, and it's really going to Mexico, or it's going to Canada, or to Europe, or China, and so now you're increasing the trade deficit more. So Trump is really, you know, you cut off your nose to spite your face, and now you have a larger trade deficit, and then you start to take some more clumsy actions to remedy that. And I think we saw that with the Delta order to Bombardier for the airplanes. That's maybe one of the reasons they went to Canada to buy these airplanes. And then Trump retaliates with tariffs, and I think so that the risk is that you have a larger and growing trade deficit, and the America takes these clumsy steps to remedy it. And it's the same on the fiscal side. And as this deficit grows, America is going to be more and more aggressive and really just nonsensical in how it's tackling it.
And fiscal stimulus at a time, as you said, when the economy is humming very strongly, that could actually force the Fed's hand into moving more aggressively than they'd like to if the economy starts getting away from them.
Right. It just becomes a comedy of errors. And you're sort of grappling with that on Canada's side. And there's just nothing you can really do on this side except try to work around the White House, and they seem to be trying to do that, and just hope and pray that you can drag NAFTA on long enough to maybe get to a new Congress or to minimize the damage, or to try to get Trump maybe to refocus on China. But right now, I mean, this is the first real shot in the trade war, and it's against Canada, more or less.
All right, Adam, always fascinating to have you here. Thanks for joining us. It was Adam Button, Chief Currency Analyst at Forex Live.